Hello, everybody. We are just going to wait a few more minutes here to see if we can get a couple more participants to join us. So just hang out with us. I'm going to put myself back on mute as we wait just until maybe 4 or 4:01 here, and we'll see if we can get a few more to join us. So just bear with me another minute, okay? Okay, folks, sounds like we're going to get started here. For those who have not met me yet, welcome. My name is Kim Smith, and I'm the Benefits Manager for the Sioux Community School District. I appreciate you joining with us today for our second Zoom meeting as we kind of go through uncharted territory here in open enrollment in a new and different time. We also have Hsa Hageman joining us from home today. She is our benefits assistant, so don't hesitate to reach out to either one of us via phone or email if you have questions as we go through this process. We're always happy to help in any way that we can. So today we're going to go through a couple different things. I'm going to actually discuss with you how we get to where we are today with our insurance process and how we elect those types of plans. We'll of course go through the plan descriptions and what those really mean for you. We'll take a look at the open enrollment website, and then we'll open it up at the end for any questions that you have. So for those who are unaware, we actually do have an insurance committee that does meet 3 times a year. That committee does meet in usually the October timeframe, January, and then in March. So in January is when we usually get our preliminary renewal rates from our vendor. This year, our medical plan came in at a 10.7% increase, which is just below the industry average of 10.8. So I know nobody likes an increase, I don't either, but unfortunately, when we're looking at that kind of an increase, we are running right about industry average, which is good. The things that they look at when we're given our renewal rates is, of course, plan utilization. What that means is what types of claims are driving our costs for the district. So for us, a lot of our claims come from back injuries or back pain, diabetes and diabetes management, and then, of course, prescription costs. Some of the other things that they look at, of course, are going to be our wellness and what are we doing as employees to make sure that we're staying healthy. So one recommendation we always tell people is make sure that you're getting your flu shots every year. Get your checkups for women. That means get your mammogram, your pap smear, your flu shot, and of course, just your general office visit. For men, that means getting your prostate exam as well as your regular office visit and your flu shot. Colonoscopies are always good to make sure that we're staying on top of those to make sure we're trying to catch any of those preliminary issues before they become major problems. Also, when it comes to prescription drugs, make sure that we're looking at generics whenever possible instead of name brands. Sometimes for some that's not an option, but for the rest of us, those are always great to try to drive our costs down just a little bit as much as we can. And then virtual visits. For those that have never tried virtual visits, it's a really great opportunity to be able to see a certified professional when it comes to your health care, but the cost of those visits are much lower than going to a standard office visit. So feel free to check that out at any point in time. You can do it for the comfort of your own home in your PJs if you like, and then they can fax over a prescription to any pharmacy that you would prefer, and then you can pick that pharmacy up when it's, or that prescription up when it's ready. And then some of the other things that we take a look at, of course, is how often are we participating in our biometric screen. So we always push that every year. So we're always looking for more participation in that. So if you have not had an opportunity to participate in the past, we try to get that up and running in October. So feel free. We're also having a really awesome wellness budget this year. So there's great participation prizes. So we welcome you if you have not tried that yet. So please do so. Some of the other things we like to discuss when it comes to our plan design is what types of recommendations can that insurance committee make to our school board. So when we are looking at plans and what's working and what's not, of course, cost and premium cost are a factor, but does that plan really meet the needs of our employees? So in the past, we have, of course, had our basic plan and our value plan. For the upcoming plan year, we're going to kind of transition a little bit into a new way of thinking. We're going to keep our value plan, which is considered a traditional plan with copays, and a lot of people are currently on that plan now, so have some experience with that. We're also adding what's called a new high deductible health plan. That plan has a $3,500 deductible, and we'll talk about that just a little bit more in a minute. And then, of course, we have FSAs, HSA, alphabet soup is in there, so bear with me. If you have any questions, we'll try to do our best to answer those at the end. So let's talk a little bit more about our plan design and what that looks like for you and me on a daily basis. So if you are at home and you have your packet in front of you, you want to pull out the one that's got, it's the health plan comparison form with the green and the yellow on it. So we're going to take a look at our green column first. That's our new high deductible health plan. Now this plan can be a little bit scary for some people because it's, again, a different way of thinking. That type of health plan has both an out-of-pocket max and deductible of $3,500. So breaking that down, what that means is when you go to the doctor for, let's say, your sinus infection, your cough, maybe some bronchitis, that office visit will have to be paid for by the member at 100%. On average, most office visits are running right about $120 per visit. If you take generic drugs, that kind of runs in the $25 to $26 range. If you would like to go to the virtual visit side, which is a really great alternative, those types of visits are running right about $49 if you would use Doctors on Demand or Amwell, which are contracted vendors through United Healthcare. However, one good thing is that your preventative services will still be covered at 100%. Those types of preventative services for females, again, would be your annual checkup. So that would be your pap smear and your mammogram as dictated by your provider. For men, of course, would be your checkup as well as your prostate exam. Colonoscopies are a little bit in that gray area. So if you have that done and everything is good, then you'll be fine. That will be covered at 100%. But once they start finding any problems and then they need to do some more exploration with that, then it will go into the diagnostic category for billing, and then it would be subject to that deductible and that out-of-pocket max. So one of the big questions I get is, well, how do I know how much I'm paying for my claims? So the best opportunity you have is to go out to the myuhc.com website and either create an account there or log in. There's also a phone app called Health, and then the number 4, Me, M-E, and you can take a look. All of the explanation of benefits are going to be out there for both office visits as well as pharmacy costs. If you click on the blue kind of header that runs across the top, there'll be a section there that says claims and benefits, and it'll list all of your EOBs there for the last plan year. So what that means is it'll say how much the office visit was, how much insurance picked up, and then how much you paid. So you'll just want to take a look to see how much was billed, and that'll give you an idea of what those costs could be out of pocket. Another thing to consider is how many times do you go to the doctor every year? If you're only going once or twice versus maybe a few more times, those are things just to contemplate of, is this a good plan for me or not? The high deductible health plan is a really awesome plan for people that don't go very often. Maybe they go for their once-a-year checkup and maybe just once or twice for a sinus infection, that kind of thing. For those people, you'll be saving that monthly premium every single month, and hopefully the intent is that you could put that money toward an HSA or what's called a health savings account. So the difference between the value plan and the high deductible plan is about $163 a month. A high deductible plan then, like I said, is eligible for a health savings account. That is a pre-tax savings account that you can actually set up through a bank of your choice. We did add a vendor list out on the website for you to take a look at too, and see if there's an appropriate bank for you. That money would be at your choice, the amount you want to have go into that account every month. You can set up an automatic deduction so you get that pre-tax savings. It goes into the health savings account, and then usually you'll be issued a debit card, and then that card can be used at the time for those medical expenses. Another question I've gotten in the past is, well, what happens if I don't have enough in my HSA to cover the full cost of a visit or a claim down the road? And that's okay, that might happen, especially as you're building those funds. So you could take out the total amount that you currently have in that, but make sure you save that receipt, because later on, once you do have enough accrued, you can continue to reimburse yourself down the road for those same expenses. Some of the other things to consider with a high deductible health plan in that HSA dollars do actually roll every year, so you never lose those funds. So that's a really great selling point for a health savings account. Another big selling point for me is that you can use those funds to help save for retirement. So as you get maybe on a more limited budget in retirement, you have a little bit of an extra padding to offset the cost of it, any medical expenses you might have during that time. The other plan, as we switch gears, is going to be our value plan. That is considered a traditional plan with copays. So as you go to the doctor, you will see that $25 copay for a general practitioner, a $40 copay for specialists, and then it'll be a tiered approach to the pharmacy and drug section. The people on the value plan have a tendency to not like as much risk, which is okay. They want to be able to go to the doctor and know it's only going to cost them that one copay, and you move forward. Both plans are good for different types of people and different risk takers. It's all about what you're comfortable with and how much you're going to use your plan. The value plan, because it is a traditional health plan, is also eligible for a FSA, or a flexible spending account. Those dollars also run through payroll as a pre-tax savings account. However, there's a little bit more of a limitation set up by the IRS for FSAs. Those dollars are use or lose by the end of our plan year, which is June 30. So just kind of keep in mind the selling points of both plans. Another question I do get a lot is, what's the difference between our fiscal year and our deductible, and how does that work? So during our school year, since we are actually in an industry that runs off of a July to June timeframe, whenever we have premium increases, those will kind of follow that same suit. So premiums for the new year will go into effect July 1 and run through June 30. However, the rest of the world, they follow a calendar year. So that means your deductibles will reset every January 1st. Now, for those that have already paid into their plan for either their deductible or out-of-pocket max, and they're going to switch plans for the new plan year, don't worry, you'll still be given credit for anything that you've already paid in. You'll just need to still pay the balance due if you have any new claims that are active between July 1 and the end of the calendar year for December 31st. Okay, so I'm going to go ahead and switch and share my screen, and I'm going to go over to our open enrollment website. For those who haven't had a chance to check this out yet, the website address is www.siouxcityschools.org/open enrollment. We do have the video up there that we did yesterday, the Zoom Q&A from 5-6 on the right-hand side. We're going to keep scrolling on that right-hand side. We also have the initial open enrollment video. We have some really great explanation videos too of what a high deductible health plan means, and it's a little bit more of an overview. And then below that, we have what is the true difference between an HSA and an FSA. So if you're trying to figure out the difference, take a look at those. The benefit of that too is that you can rewatch them as often as you like. So then we're going to scroll back up to the top here, and then we're going to look on the left-hand side, and we'll kind of go through some of the different options over here. Under the medical section, we have our annual report from our last year. We have a section on frequently asked questions, so make sure you check that out. Of course, the health plan comparison that we just reviewed, that's the one with the yellow and the green on it. Some important information about our insurance plan, and then our medical benefit summaries. Below that, we have some more information on the high deductible health plan. The contribution form for an HSA is out there for you to go ahead and print and return. One question I've gotten already too is, when do those contributions start, and when can I set up my HSA account? You can actually set up an account with a banker at any point between now and July 1st. However, contributions just won't start until July 1. If you're looking for a vendor in the area, there's a list of health savings account vendors. Security National Bank is a pretty popular bank in the area. Central Bank is on there. Optum Bank is actually more of a virtual bank, but you're more than welcome to check them out. Of course, Pioneer, Great Southern, and then Heritage are all good options in the Siouxland area for you to take a look at. Now, due to COVID-19, each bank may have different policies about how to go about setting up an account. So I would recommend calling them first to make an appointment, and they'll walk you through what their in-building procedures are. Just below that is also the flexible spending account form for contributions. And again, that form would be for only those who elect the value plan. We have our dental benefit summary below that, our vision summary. We have a little bit more information here regarding some additional FSA information, LDT, and wellness. And then if you have lost your benefit rate sheet, can't find it or just need to see it again, we have all of them listed by group and status here on the web page. Just make sure that when you're looking that you are looking at your appropriate group and your status, because each group does receive a different cafeteria benefit amount. So I'm just going to go ahead and take a look at our teacher group, because that seems to be the largest group that we have for employees. And we'll talk through kind of what we have to look at here, because it is a little bit confusing. This will be the form that's got red and black for those that are following along at home. So the employee group will be at the top left-hand corner, so just verify that that is truly the accurate group for you. Then we're going to look at this monthly district provided coverage amount. At the top, it'll say how much your employee group receives from the district as a whole. So this group receives $12.75. The dental cost premium, which is district paid for full-time employees, is $33. The life insurance for this group is $358. The medical amount, which is always the lowest cost medical plan option, this year is $784. So when you take $12.75 minus those three premium amounts, you'll get a remaining balance. So $554.42 is the remaining cafeteria cash amount for this employee group. That amount will go back into your paycheck as a taxable earnings. In theory, you can either just take that as extra pay, or you can offset any additional costs you may need to purchase for either yourself or dependents. So as we look down the screen just a little bit, we'll have a section here on the medical. You can see we break it down by employee only. So the value plan is considered now the buy up option. So the cost associated to choose that plan is here. Then we have plus spouse, plus children, and then plus full family. We also have dental insurance, term life insurance, vision, and then a reminder about flex, and then the long-term disability rates there at the bottom. And that kind of gives us a good overview of where we are at for this year with our open enrollment process. And now I'm going to go ahead and open it up for questions. So since we have the group muted, I'm going to have you use the chat function, which is located, it should be in the lower toolbar of your screen. So feel free to type in any questions, and I will try to answer them the best that I can as they come through. If it gets to be a little bit too much, I'll try to get back to the group as much as I can with any questions that are a little bit either more technical or maybe don't apply to the whole group. It's more of a specific question. So feel free to start typing those in. I don't see anything yet. Can family members use HSAs? That's a great question. So family members, let me kind of backtrack. So the employee has to be the one that contributes to that pre-tax savings account so they can get that benefit. However, the receipts can be for the entire family under your household that is considered by the IRS. So for me, if I have an HSA and my husband goes to a chiropractor, I can reimburse either him or I out of those funds from the HSA. So yes, it goes by household. So that's a great question. Will the new premiums show on our June 30 or July 31st check? And this comes from a teacher. So because the premiums go into effect July 1, teachers will receive the new premium amounts on their paychecks at the end of the month. So that'd be July. You'll see that July 31 paycheck. I'm gonna scroll up here just a little bit. It says, so if you take value, you use an FSA form, that is correct. If you use the high deductible, then you have to fill out the HSA form, correct. You can either send those forms back to me via email, or you can send those forms back to me through school mail, or you can put them in the postal mail and I will also get them. That address is 627 4th Street in downtown Sioux City, so it's 51101. It does, or it's a little bit helpful for our receptionist if you put my attention on there, so attention Kim Smith. Let's see here. Okay, so this is a good question. If you would like to not take the medical, so you're waiving medical, but you want to do dental and vision, what happens to your cafeteria amount? So first of all, all three are standalone policies, so you can either elect or decline any of those policies. But if you choose to decline a district-paid benefit, you forfeit the amount that the district is putting toward that cost. So that would mean that you are, for medical, you would forfeit that $784 versus take that coverage. For some, that can be a good thing, and for some it can be a bad thing. I'm always a proponent of secondary coverage is a good thing. However, if that secondary coverage is going to cause you problems by having coverage with the district, that would be an option to consider, would be to waive our policy. It's always, we try to keep people on the plan as much as possible. So if you have any more questions, just give me a call and I can talk if that's a good option for you or not. Where can I find the Flex enrollment form? That is out on the Open Enrollment website. It's about halfway down the page under Flexible Spending Account. It's a PDF that you can print. If you do not have a printer at home, make sure just to send me a quick email and I can send you a form in the postal mail and you can fill that out and get that back to me. Can the contribution amount to an HSA be changed throughout the year? Yes, that is another selling point of an HSA. You have more control on that account and those funds. So if you wanted to, you could contribute for 3 or 4 months and then stop. You do not need to have a qualifying event. On the flip side, with a flexible spending account, you are stuck with the amount that you pick at the beginning of our plan year unless you have a qualifying event. So things to consider when you're choosing either the high deductible or the value plan. Good questions. Okay, it says, is the family deductible for the high deductible health plan, I think they meant to say 14,000 for the year for all categories. So when it comes to the deductible on that high deductible plan, for singles, it's $3,500. When you're looking at the family deductible, it goes off of 2 or more. So if I have a family of, let's say, 5 people, and we all get into a car accident, I would have to hit my deductible, of course, of $3,500, and the others, they would all fall into a lump of that remaining $3,500. So the most that you would have to pay is $7,000. But let's kind of change that scenario a little bit. Let's say it's my children, if I have children. If they are riding with a friend, they get into a car accident, but only one of them gets hurt and goes to the doctor, you still only have to pay that $3,500 high deductible amount until a second person starts to have claims, and then it goes to the family. Okay, so the next question, if we have the high deductible plan, would we pay the cost of an office visit at the time of the visit, or basically does that get submitted to United Healthcare? It will get submitted to United Healthcare first, and then you'll get billed for it later on. Okay, so here's another thing. When it comes to the difference between dependent flex and medical flex. So there's, with the flexible spending account, there's actually 2 different options. There's a medical side and then there's a dependent daycare side. So this is where it gets really muddy. If you have an employee, I'm just gonna give a scenario here, that wants to do the high deductible health plan, so they're gonna do an HSA, but they also have children that are in daycare and they have daycare expenses, they can still continue to do a dependent daycare flex account through one-to-one benefits. So they actually have to fill out both forms, okay? But a clarification, both an HSA as well as an FSA can both be used for medical expenses, dental expenses, and vision expenses for you or anybody in your household. So hopefully I clarified that question. What is the long-term disability benefit, and is it a 90-day waiting period for receipt of benefits? So long-term disability is in the event that you become disabled and cannot work due to a catastrophic medical issue. So normally that would be cancer is a big one that we see, major car accidents where you maybe might become disabled, something like that. The plan will pay up to 66 2/3%. However, there is a 90-day waiting period. So in theory, you would use whatever sick time that you've accrued for that first 90 days, but keep in mind, it's 90 calendar days, not business days. And summer does actually count toward that 90-day window, which is kind of good. So when people are contemplating, do they want to keep LTD or not? What I suggest is take a look at your savings account and any other plans you have in place. In the event that you can't work, do you have enough funds to pay your mortgage, to pay for your kids' school supplies, to pay for groceries, to pay for your utilities? If you don't, the LTD is a really good backup plan in the event that something horrible happens. If you have another policy in place that will cover that, great. Maybe you can look at other options. But truly, LTD is a really great benefit for those who may not be able to cover themselves in the event that we have a horrible issue that we're dealing with. Okay, does medical costs paid by another insurance such as TRICARE apply to the deductible for the high deductible health plan? So there we're looking at people that have double coverage or supplemental coverage, and I actually fit into that boat, so I'm going to use myself as an example. And this might be different for everybody. So I have secondary coverage through my husband, and he's military, and so I also have TRICARE, and that is actually one of the questions that pertains to this. So I'm going to take the high deductible health care. If I have a claim, it'll run through my claim first, or my high deductible health plan, then it will kick over to the other plan. Now, TRICARE is unique in the fact that if no claims are paid under mine, they'll get picked up by TRICARE. But here's the kicker. Not every plan is like that. So what you need to ask that other provider is called a coordination of benefits language. So that language will dictate how that secondary plan will pick up when those claims run through. Some will not pick up unless you meet your out-of-pocket, your deductible and your OPM on your plan first, and then they'll kick in. So every plan, like I said, is different. So you really need to do your research and check the policy language of that secondary coverage first before making your decision of what plan will be best for you or your family. Okay, the question is, if you filled out for long-term disability coverage in previous years, do you have to fill or sign something again this year? No, you do not. The only time, and I think you're referring to what's called the Evidence of Insurability form, or the EOI, that form only needs to be completed if you have at one point dropped coverage, and that would apply to LTD and supplemental life insurance, and for part-timers who have to pay in for life insurance, that could possibly affect the basic coverage too. But if that coverage has been dropped and you want to re-add it this year, then you need to fill out that EOI. And what that is, it's a health questionnaire is what it boils down to. That health questionnaire will then get sent to our carrier, Madison National, and then they'll make the determination whether or not that policy can be re-added or not. Sometimes you can, sometimes you can't, depending on what that questionnaire looks like. Okay, next question. Does the HSA take the place of the traditional medical flex? Yes, awesome question. Can it carry over to the next year? That it can. HSAs continue to carry or roll every single year. FSAs do not, okay? Okay, so if a teacher was choosing the value plan for themselves, spouse, and children, that would be the full family coverage. It would be $960. Ooh, I lost it. Bear with me here. You know what, actually, Sioux Coop, I'm going to respond back to you individually because I just want to make sure I get those numbers right. It's going to be a little bit tough with the scrolling of all of the text to stay on top of that one, but I'll get back to you. The next question is, if I have a dependent with a prescription that is currently $50 a month on tier 3, for the value plan and the cost of the prescription is $600 without insurance, I will pay $600 out of pocket on the high deductible. You will. That is correct. So those prescription costs will be out of pocket. The plus side of that, though, is that $600 to meeting your out-of-pocket max sooner, so that insurance will kick in sooner, okay? Does UHC negotiate this price with the pharmacy similar to how it does for medical procedures in the office? Normally, yes. So they do have contracted amounts with different prescription costs, but this might also be a good time to take a look at those prescriptions and talk to your pharmacist to see if there's a different option that might be cheaper. Now, this is obviously a pretty high dollar prescription that we're talking about, but keep in mind, if there is ever a situation where you might be eligible for those $4 generics, no sense in not picking up that and not have it running through. So that's another option there too. But regarding, yes, you would be responsible for that full prescription cost on that high deductible health plan. Keep them coming, guys. These are all really awesome questions. We're getting into a little bit of a lull here, so feel free to keep typing. I see questions of all sorts, so I'd rather have you ask and be comfortable with your plan versus be on the fence about something. So please feel free to throw something out there if you're not sure. I'll give it another minute here till 4:30, see if we have any others that want to roll through. Okay, here's another great one. Got a couple here. What is the benefit of a high deductible health plan if you're paying 100% up to the $3,500 deductible? Awesome question, because I get a lot of people that think, why the heck do I want that? Honestly, there's a couple really good reasons. Number one, if you don't have a lot of claims, you're saving the monthly premium cost by not usually going to the doctor. On the flip side, if you are meeting your deductible every single year anyway, that's a really good option for people that have high utilization. Because not only are you saving the monthly premiums, you don't have to pay all this extra stuff. You know how much you have to pay off the cuff, and you're actually going to save money in the long run. Insurance will kick in once you hit that $3,500, but usually that's going to be earlier in the year anyway. So ultimately, what you would want to do is put that money that you're saving in premiums and put that in an HSA. In the event that you need to use it, it's there. Otherwise, you can keep saving those funds year after year, and then at some point in time, you can either use that toward retirement, or there may be a catastrophic here at a later point down the road where you need those funds. So awesome question. One question here, sorry I joined late. How do you sign up for the HSA? There's an enrollment form out on the open enrollment website for that. Feel free to print, and then you'll just need to make an appointment with a banker to get the HSA set up, and there's also a vendor list out there. Is there a penalty for not electing medical insurance? No, there is no penalty. It's just that you're forfeiting the cafeteria cash dollars that the district is putting aside for those. How easy is it to make claims? So I'm thinking that you're referring to the reimbursement from the HSA, possibly. So if that's the case, you can actually use the debit card that will be issued for that account, and you can just use that when you go to pay for those claims. Otherwise, it'll just sit in that account until you need it, and then you could also just take money out as you have claims that come through. Just make sure you're keeping your receipts, because there is always the potential that you could get audited by the IRS. And at that point in time, you would need to keep those receipts for that. The next question is, so does the deductible include doctor, pharmacy, copays, and hospitals? That is correct. Well, I shouldn't say that. Let me rephrase that. On the high deductible health plan, it includes everything, no matter what, except for visits that are approved under the Affordable Health Care Act. So that would be your annual visit. Or any preventive services. When we're talking about the value plan, what gets applied to your deductible, it would usually be considered like a procedure, like if you would have your knee scoped, an MRI, surgery, that kind of thing. Those items get subject to your deductible and your out-of-pocket max. So hopefully I kind of clarified that. If you are still confused, just email me on that one. If you take 4 or more prescriptions, which plan should you stay on? That depends on how much those prescriptions are. If they're incredibly high dollar prescriptions, it depends on how often that you take them. I would recommend taking a look at your EOBs, which are located out on the myuhc.com website. See how much those are going to cost you out of pocket, and see if that savings through your premiums would be more or less than what that cost would be out of pocket. So those are some things to look at and do a little bit of research on. Next question is Wells Fargo one of the vendors? They are not a vendor. Unfortunately, they used to provide HSAs, but they got out of that market. They now use a third party called Optum Bank, which is more like an online bank. Still a great option, but they don't have an in Siouxland network for those. I had one person that said, yes, make sure you keep your receipts. That's a good thing, especially if you use one-to-one benefits. They have a tendency to be a little bit more picky about making sure that those services that you elect are considered eligible. If I've always had basic life and I want to continue it, do I have to do anything? The answer is no. That will continue from year to year. Okay, so what roughly would the monthly premium savings be between the high deductible and the value plan? For an individual, that's right about $163 a month, give or take. When it comes to dependents, it's hardest to throw that one off the cuff because we have so many different levels. But I will respond back to the employee that emailed me on that one individually, and we can run through that. Do both plans pay 100% after you meet the deductible? The answer is no. The deductible is that first level. It just so happens that on the high deductible plan, the deductible and the out-of-pocket max are the same. So that's $3,500. On the value plan, the deductible for that plan for a single is $1,500. Then it goes to a co-insurance, which means you pay 20% of any remaining bills up to your out-of-pocket max, but that just so happens to also be $3,500. Okay, I think we've answered the majority of them. Feel free to keep on coming, guys. I still got time if you have more out there. What is the deductible for the value plan? And again, that information can be found on the one with the yellow and the green bars on it. If you're looking at home. However, just to answer that question, the deductible on the value plan is $1,500 for single, and for full family, it goes to $3,000. Then the out-of-pocket max on the value plan again is going to be $3,500, and then that didn't come out right. $3,500 for singles, and then $7,000 for family. On the high deductible plan, it would be $3,500 as well as $7,000 for family. And again, that can be found on the one with the yellow and green lines on it, which is also on the district open enrollment website if you need to refer back to that if you can't find it at home. Okay, next question is, if I have not had supplemental life insurance and do not want to, don't want to elect it in the future, do I need to mark no change or decline coverage? You can just mark no change to that because you're not actually changing anything. It will remain the same. Good question. Does the value plan pay for elective surgeries? It depends on what kind of elective surgeries they are. Cosmetic is usually no. I know we don't cover breast reductions, and we don't cover gastric bypass. If there is any other types of surgery out there, we'd have to take a look. Normally there needs to be a medical need for it before insurance will cover it. And they usually have to go through some approval processes for that. But feel free to email me or reach out if you have any questions on a specific type of surgery that you're looking at, and we can check specifically to see if that type of a surgery is going to be approved or not. One question I do get a lot that I like to kind of review is on the open enrollment form, how do I really fill it out? And that's okay. So we're going to be looking at the sheet here. This was mine. So it's got the yellow and the gold at the top. So if I don't want to make any changes, all you have to do is mark the box in the middle that says no change, flip it over, and then sign a date on the back. Now I'm going to go from the value plan to the high deductible plan. So what I'm going to do is on the back side, you're going to look under the line that says health. I'm going to check the box here that says high deductible health plan. I'm the only one covered. So then I'm going to mark the box for just myself. And then I'm also going to add vision for myself. So I marked no change to dental because that's the line that's next. Under the vision line, I'm going to add myself to the plan and just mark employee only. Then I put no change for everything else, okay? Then because I chose the high deductible plan, I also need to sign off on section 4 saying that I understand that I could be responsible for those charges. And then also section 5 here at the bottom. Another question that I do get is, well, how do I remove somebody from a plan? So in the middle here, if there's a section that you can itemize out any dependents you want to drop from a plan, you'll mark the box that says remove, and then check each plan type you want to remove them from. Okay, the next one, can the HSA account cover your out-of-pocket or deductible charges? It can. That's the main selling point of those, which is really awesome. So in theory, you want to keep putting money toward those for those services you may not know that you need. Another question that I get is, well, how much should I put in? Some people like to put in just enough to cover their deductible, and that might take a couple months to get to, or maybe a year, depending on how much you put in. And then after you get to that point, you need to reevaluate and say, well, do I want to keep putting in? Because if I have more than one bad year, am I going to have enough in the future to still, cover those costs? That would be a question for you and your finances. I always recommend probably continuing to put in, because it's a pre-tax savings, so that's a bonus. And also, do you have any other family members that could use that? The answer is potentially yes, potentially no. So different things to consider on that one, but just keep in mind, if you ever get into a financial bind with the HSA, you can stop contributions with that. You do have flexibility with that account. So that's another extra thing. Can a person add a lump sum into an HSA, or does it need to be done monthly through payroll? It still has to go through payroll, but if you wanted to, you could do one big lump and then cancel it for the next month or the next payroll. So that's something to consider. Okay, so if you are waiting for a transplant and use HSA rollover dollars that can be used to offset the cost, let me just reread that. So basically, if you're waiting for a surgery to be approved, can you use those costs to offset, or the HSA dollars to offset? The answer is yes to that, but that does respond. Let me think about another kind of follow-up to that one here. Do we fill out section 3 for areas if we are declining section 2? Yes, please. If you are declining coverage, there's a waiver section. Please mark the section that you want to waive and sign that area. That just helps make things crystal clear. It says, do you have to have a high deductible plan to contribute to an HSA? Yes, you have to have. It doesn't have to be with us, but you do need to have a high deductible plan somewhere that you're covered on in order to contribute to an HSA. Lincoln, I'm going to respond back to you individually on some of your questions. They're getting to be a little bit more specific here, but I'll reach out to you once we're finished. Another question that I've gotten is, what happens if at one point in time you want to go back to a traditional plan? What happens to those HSA dollars? There's some benefit to that. So if I want to be on the high deductible health plan, let's say for 3 years, and then I'm just, for whatever reason, life event, whatever changes, I go back to a value plan, that's okay. I can do that. Now, here's the kicker. I have to stop contributions to that health savings account. I'm no longer eligible to keep contributing to that account. I have a couple options. I can start a new account through the flexible spending side, the flex, but I still have access to those health savings account dollars on the first side, we'll call it. I just can't double dip with the same receipts. So if I have, let's say, a $500 bill, I can use $200 out of one account, $200 out of the other account, but I can't do $500 from both. That would be fraudulent. Just make sure that you're keeping clear records for audit purposes if you would ever have to go through that for IRS purposes. Okay, so feel free to keep on coming. We have more time if there's more questions. I'll give it another couple minutes here. Feel free to get a few last ones in if you like. Oh, this is a great question. If we have specific concerns that might be unique, or you just don't want to put them out there for the chat or the main questions, can you email somebody? Yes, of course, anytime. I'm still working in office, so feel free to either email me directly. So that would be smithk@live.siouxcityschools.com, or Kaisa can also be found in the Outlook as Higma. She'll be laughing at that, at live.siouxcityschools.com. You can also call either one of us. My direct number is 279-6692, extension 6121, and Kaisa is at extension 6120. Anytime, please feel free to call. I'm usually in the office 7:30 to 5:30-ish, somewhere in there. But I'll be honest, I'm usually faster responding to emails than I am to voicemails, but whatever works, just make sure that you're patient with me. But normally we try to get everybody responded back to within the first 24 hours. That's our goal. Okay, I'll give it 2 more minutes here. We'll give it to 4:45. All right, well, we'll start wrapping up here. If you have any questions, like I said, feel free to reach out. Forms can be returned back to me via school mail, postal mail, or you can drop them off in the vestibule area outside of the ESC. You can definitely email it in as well. If you want to scan and email that, you're more than welcome. That'll save everybody a trip and save some germs. All right, I think that we are pretty good, folks. I hope everybody stays safe. I'm so glad that you were able to join us. We'll get this video also posted out on the district website so you can share that with any family or friends that may want to review it. Forms need to be turned in to us by 5/29. That's a Friday. That's the last Friday in May. So if we have any more questions, we'll make sure to reach back out to people. Otherwise, enjoy the weekend coming up here and stay safe, everybody. Nice to see you. Thank you for joining.